Welcome to the Radio Revenue Podcast. Welcome, curious minds, to another deep dive.
Today, we're really pulling back the curtain on a company whose products you probably reach for every day, the JM Smucker Company.
Indeed. And our mission today is to, well, unpack their latest annual report, the Form 10K, for the fiscal year ending April 30, 2025. Think of the 10K as like the really comprehensive annual financial report every public company files. It's their detailed yearly health checkup, basically. And we're going to extract the most important nuggets for you, give you a shortcut to being truly well-informed about this food industry giant. That's exactly right. And yeah, this document, it can be incredibly dense, but we're here to guide you through the key insights. We'll cover everything from their core strategy to some, frankly, surprising challenges they're facing, and also how they're investing in their future, and maybe even more critically, their people. So get ready for some insights that might make you go, aha. Okay, so let's start with the basics. When you think Smucker's, maybe jam comes to mind, or coffee, but what does their latest 10K actually reveal about their core business? What's the main focus?
Well, what's really significant here is Smucker's clear strategic choice. They primarily focus on selling branded food and beverage products, ones where they have leadership positions direct to North American consumers through, retail outlets. And this isn't just a side thing. These operations made up a huge 86% of their consolidated net sales in 2025.
86%, wow.
Yeah, it tells you they're really leveraging that brand loyalty as their main growth engine, which, comes with its own risks and rewards.
That's a powerful insight. Really narrows their focus. So, okay, which of those iconic brands are we talking about here? You'll definitely recognize these names. First, U.S. retail coffee. That's home to brands like Folgers, Dunkin'.
And it's important to note that Dunkin' brand is under a specific license, right? Runs until early 2039.
Good point, yes. And also the fast-growing Café Bustelo. Then there's U.S. retail frozen handheld and spreads. Think Uncrustables, those are everywhere. Jif peanut butter, and of course Smucker's fruit spreads.
Can't forget those.
In U.S. retail pet foods, they're big here too, with names like Meow Mix, Milk-Bone, Pepperoni, and canine carryouts.
A lot of familiar names.
Definitely. And finally, sweet baked snacks. The big recent addition there is the Hostess brand.
Right. Now, beyond North America, they do have an international and away-from-home segment. They distribute products globally and also to food service places like restaurants, hospitals, schools. But like you said, their main strategic vision is really sharp. Long-term growth, mostly in North America, with a specific focus on pet, coffee, and snacking.
Okay, now here's where it gets maybe a bit trickier. Even a company built on these, household staples faces some pretty big headwinds. We're talking everything from the cost of basic ingredients to how our tastes are changing. What does the 10K tell us about these vulnerabilities?
Yeah, a really critical point to consider is just how much they rely on commodities and agricultural products. Think green coffee, peanuts, flour, sugar, oils, fats, fruit. Not to mention packaging like plastic, glass, metal cans. All of these things, they're subject to pretty significant swings in price and availability. Green coffee, for instance, is sourced only from foreign countries. That makes its supply and price really unstable. Things like weather, global demand shifts, plant diseases, even investor speculation or geopolitical conflicts can mess with it.
And it's not just about the cost itself, is it? What about the logistics? Getting these materials or potential single points of failure in their chain?
You've really hit on a key vulnerability there. The company has, chosen, or maybe it's a necessity, to single source certain critical raw materials. This includes packaging for big brands like Folgers coffee and Jif peanut butter, even finished goods like K-Cup pods.
Single source, wow.
And what's maybe even more striking is that pretty much all of their coffee production happens at one single manufacturing site. In New Orleans, Louisiana.
New Orleans, so hurricanes.
Exactly. That location makes it particularly susceptible to risks from hurricanes and other severe weather. Imagine a major storm hitting your morning coffee supply.
Yeah, that's a big risk concentration. Okay, so beyond these supply chain issues, how are they dealing with the competition? And maybe more importantly, how are our preferences as consumers challenging them?
Well, their business is definitely in a highly competitive space. To stay ahead, companies like Smucker's, they need to constantly adapt. Adapt to new consumer preferences, tech advances, the huge growth of e-commerce. Historically, packaged foods saw a bit of a decline in sales volume in the center of the store, the aisles with cans and boxes.
Right.
Partly because people are more focused on health, wellness, fresh foods, and also social media trends play a role. However, more recently, there's actually been an uptick in sales. driven by new behaviors like more people working from home.
Ah, interesting. So that work from home shift actually helped packaged goods.
Seems like it. It's a fascinating kind of push and pull dynamic going on.
Okay, so we've covered products, the market, the supply chain risks.
Yep.
But what about the people, the actual employees at Smucker's?
Mhm.
The 10K puts quite a bit of emphasis on their basic beliefs and their approach to their workforce.
Mhm.
What can we learn about their culture?
Yeah, what's really insightful is how they frame it. They explicitly state their, what is it, over 8,000 full-time employees are their most important resources. And their culture is guided by 5 basic beliefs. Be bold, be kind, do the right thing, play to win, and thrive together.
Together.
Exactly. And that Thrive Together pillar, it specifically focuses on holistic employee support, which translates into some very real initiatives.
That thrive together idea sounds like more than just corporate speak then. What are some examples of how they actually, put that into practice?
Oh, absolutely. It seems like it's not just words, it's a strategic investment. For example, under Community, they report donating over $10 million to more than 100 philanthropic partners, local food banks, Red Cross, Feeding America. Their Milkbone brand even funds canine assistance, placing service dogs.
That's impressive.
And then there's career. They really seem to foster internal growth. The fact that 4 out of 6 exec leaders were promoted from within, that says something. Plus, their employee turnover is apparently below the industry average.
Okay, what else?
Health and wellness, safety is a big priority. Their total recordable incident rate was less than half the national average for similar companies. That's significant.
That's right.
On the financial side, they talk about market competitive pay, performance bonuses, a comprehensive total rewards program, including a retirement savings plan with a company match, and they do annual pay equity analyses.
Good. And family.
Yeah, family benefits look quite competitive too. Generous paid time off, 12 paid holidays, 12 weeks parental leave, even pet bereavement leave.
Pet bereavement, okay.
And they offer enhanced financial support for things like fertility treatments, adoption, and surrogacy.
It certainly sounds like they view their employees as a strategic asset. Now, connecting this to the bigger picture, beyond the people, they're also making big investments in technology, right?
Yeah.
Specifically, this new enterprise performance management system. What does that signal for their future?
Yeah, this is a really crucial strategic move. They're in the middle of a multi-year rollout of a new enterprise performance management system, or EPM. They're using Oracle Cloud Solutions, and it should be fully up and running in early 2026.
So what does an EPM system actually do for them?
Well, it's not just like an IT upgrade. It's designed to maintain financial records more effectively, significantly boost operational efficiency, and critically, provide timely, accurate information to management. That's vital for making quick, smart decisions in today's market.
Makes sense.
Yeah.
Agile decision-making.
Exactly. And showing they're serious about security, too, they follow the NIST cybersecurity framework standards. That's the National Institute of Standards and Technology, kind of the gold standard.
Yeah.
And they do mandatory annual security training for everyone. It shows they get that the digital backbone is just as critical as their physical supply chain.
Okay. All right, let's shift gears and talk about the bottom line. Because this year's 10K, it reveals some really significant numbers, especially around net income. And the story here is, well, it's pretty dramatic.
It truly is. For fiscal year 2025, the JM Smucker company reported a consolidated net loss of $1,230.8 million.
A loss after making money the year before.
A huge loss. It's a stark contrast to the $744.0 million net income they reported in 2024. This isn't just a small dip, it's a profound reversal.
Wow. Over $1 billion loss. What on earth drove such a massive swing?
Well, the primary driver, and this is really fascinating from an accounting angle, is a huge chunk attributed to significant non-cash pre-tax impairment charges, totaling about $1.98 billion in 2025.
Okay, unpack impairment charge for us.
Yeah.
Non-cash, but still sounds bad.
Right. So impairment isn't like giving to charity. It's an accounting term for when the value of an asset you acquired, think brand reputation, customer lists, what's called goodwill, drops below what you're carrying it for on your books. And these charges were mostly linked to the goodwill of their sweet baked snacks unit and the Hostess brand trademark itself.
The Hostess acquisition.
Exactly. The company cited execution challenges, issues with distribution, merchandising, competition, plus higher inflation and less spending money for consumers. In fact, their plan for 2026 includes closing the Indianapolis manufacturing plant for sweet baked snacks.
Closing a plant.
Yeah, that tells you the Hostess deal, while it added sales, also brought some major financial pain and forced a hard look at its strategic fit.
So Hostess added what, over $669 million in new sales in 2025, but it came with this almost $2 billion impairment hit. Ouch. What about their overall financial health beyond that specific issue, like their debt levels?
Their total debt actually came down slightly from about $8.4 billion in 2024 to around $7.7 billion in 2025. They even got a new $650 million term loan back in March 2025 to help pay off some other debt. So they are actively managing their balance sheet.
Okay.
They also use various derivatives and, financial contracts to manage risks from changing interest rates, commodity prices, foreign currency rates. It is worth noting, though, not all these derivatives qualify for special hedge accounting. That can sometimes make their reported earnings jump around a bit, as gains or losses might hit the income statement immediately.
Right. Adds volatility.
Yeah.
Now, speaking of potential impacts, I saw something about legal issues, something involving Folgers Coffee.
Yeah, this raises an interesting point about consumer claims. They're currently defendants in several class action lawsuits. The lawsuits allege Smucker's misrepresented how many servings you can actually make from different Folgers coffee canisters based on the packaging.
Misleading labels.
That's the allegation. Now, they haven't set aside any money for potential losses from this yet, as of April 30th, 2025. But, a big judgment against them could definitely impact the business.
Anything else on the legal front?
They also have their own claim going, seeking about $109 million Canadian plus damages against the folks who sold them the Vortman business a while back. They allege non-disclosures and misrepresentations led them to overpay. So legal battles on a couple of fronts, highlighting potential financial exposures.
Okay, so with all this turbulence, the hostess impairment, these challenges, the legal stuff, how did their stock actually perform?
Well, the visual we looked at shows their stock performance from April 2020 to April 2025. It generally tracked along with the S&P Packaged Foods and Meats Index.
Okay, tracked its sector.
Right. But the key takeaway is that both of those, Smucker stock and the Packaged Foods Index, significantly underperformed the broader S&P 500 index during that whole period. And by April 2025, Smucker stock ended up below both indices.
So lagging the market overall.
Yeah. It suggests that while they're a household name, their specific sector challenges and maybe their own execution issues have definitely impacted their relative market performance.
Wow, what a deep dive indeed. We've really peeled back the layers on the JM Smucker company. It reveals a company that, despite having all these household name brands and what seems like a strong commitment to employees and communities, is definitely navigating some serious challenges, from managing those volatile raw material costs, integrating big acquisitions like Hostess that led to huge write-downs, to dealing with changing consumer tastes and these ongoing legal battles. It's a really dynamic and complex picture.
It really is. And while fiscal 2025 brought that pretty considerable net loss, mostly because of the Hostess brand impairment, you do see pieces of their ongoing strategy, their investment in people, that strategic IT modernization with the new EPM system, their active risk management. They're clearly trying to build resilience for the future.
So what does all this mean for you, our listener? Well, it really raises an important question, doesn't it? Given Smucker's big investment in its people and that thrive together philosophy, how might a company like this leverage its internal culture, its employee stability, to maybe overcome that external market volatility, and perhaps integrate future acquisitions more smoothly than it seemed the Hostess brand's experience went? And, what role will that new EPM system actually play in transforming their financial and operational agility going forward? Lots to think about there. It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.